Hello and welcome to the Lima Market Report. I'm Marco Lima and this is your weekly market commentary for the week of September 8, 2025. Let's take a look back at what happened last week and what to watch in the days ahead. It was a short but eventful week on Wall Street. The S&P 500 gained 0.3%, but pulled back Friday after a weaker than expected jobs report. The Nasdaq, on the other hand, outperformed, up 1.2%, thanks to strength in technology, especially semiconductors. And in bonds, we saw a strong rally. Treasury yields dropped to multi-month lows with the 10-year finished near 4.09% and the 2-year at 3.53. So what drove the markets? The August job report was the biggest story for the day. The economy added just 22,000 jobs. That's pretty weak. And the unemployment rose to 4.3%. The data strengthened expectations for a Fed rate cut in September. Early in the week, stocks hit record highs on hopes that the Fed could engineer a soft landing. But by Friday, weaker jobs data brought some to caution. On the corporate side, Broadcom surged on a strong AI rally and Tesla climbed on compensation-linked news. And Lululemon fell after lowering its outlook. Meanwhile, lower yields spurred heavy activity in the credit markets. About $70 billion in new investment-grade bonds were issued. Now let's take a look ahead to what to expect in the week of September 8. Opportunities. With growth cooling and the Fed likely to cut, high-quality bonds look attractive. Adding some duration in treasuries and investment-grade credit could benefit if yields fall further. In equities, quality growth and AI infrastructure remain strong themes, supported by easier financial conditions. And in credit, active new bond issuance may offer attractive entry points with extra spread. What are the concerns? There are always concerns. All eyes on the inflation report this week. CPI and PPI could reset expectations quickly. If inflation runs hot, it could wait on stocks and push yields higher. We're also seeing big differences in earnings results, with some companies surging and others sliding. That means investors need to discipline and risk controls. And finally, some strategy cautions that markets may be underestimating fiscal and inflation risks. A sudden spike in yields would challenge both bonds and long duration equities. Here, how we are thinking about positioning. For equities, keep a quality core with a selective exposure to tech and AI, while starting to tilt towards cyclicals and small caps if the Fed does cut. For fixed income, a blend of treasuries and investment grades. Credit looks compelling, while staying cautious in high yield, focused only on companies with strong cash flows, of course. And that is it for this week's edition of the Lima Market Report. My goal is to always help you navigate markets with clarity and confidence. Visit mreadvisory.com to learn more. Thanks for tuning in, and I will see you next week with more insights.